Hello and welcome to the week ahead video with me, David Madden. The major events to watch out for in the week ahead is US CPI on Wednesday, and also we have UK's second quarter GDP reading on Thursday. Now, before we spend more time going into further details about the major events of next week, let's take a quick recap of the events that happened this week and the last week or 10 days, because that ties in with the big events of next week. So I'm starting off here looking at the pound versus the US dollar, which saw a lot of volatility this week because on the week just gone, we had some mixed economic indicators out of the US, and in turn we saw a very volatile US dollar. On Wednesday, we had a very disappointing ADP employment reading. It came in far lower than expected. It put pressure on the US dollar, hence why we saw a big swing to the upside in pound dollar. Shortly after that, we had a much better than expected services number, so that kind of counteracted those fears that the US economy is slowing down. We actually saw a strong rally in the dollar, hence why we saw this very large swing here, this very large price action in the pound versus the dollar. On Thursday, the jobless claims reading was pretty good. It declined ever so slightly. It was broadly speaking in line with the expectations, but ultimately, even though there are some improvements in the US economy, there are also some pockets of weakness, and there are creeping fears the recovery in the US economy is slowing down. And with that, the CPI numbers on Wednesday from the US are going to be very much in focus, because traders are going to be wondering, is demand strong or is it weakening? Now, the headline CPI figure in the US is 5.4%, its highest level since 2008. This is a bit of a headache for the Federal Reserve. Traders are going to be wondering, if we do continue to have a very strong high CPI number, could that prompt the Federal Reserve to kind of bring forward their talk about tapering the government bond buying scheme, or are they going to be more fixated on what's going on with the unemployment on the jobs market? Speaking of which, I'm recording this video in advance of the US non-farm payrolls report, so some of the price action I'm looking at might be a little out of date. But ultimately, when the traders are looking at the CPI data on Wednesday, they're asking themselves, is the US economy recovering or at a decent pace, or is it slowing? Keep in mind, about a week and a half ago, nearly 2 weeks ago, the second quarter of US GDP came in way below expectations, and that was kind of a major kind of concern for some traders, because the US economy is moving forward, but it just seems to be doing it at a less impressive pace than economists have predicted. So pound dollar is going to be very much in focus this week, because not only do we have US CPI on Wednesday, we also have UK GDP on Thursday. So we could see a lot of volatility in this currency pair. Broadly speaking, pound dollar has been pushing higher since basically mid to late July. It's broadly speaking in its upward trend here. We can see here that it's holding above these three simple moving averages, and while it holds above those averages, it's likely the upward trend will continue and move higher from here. Could see a target 1.3982, and a break beyond that could see a target 1.4131, and if we go beyond that again, we could look towards this region just north of 1.4180. Any moves to the downside, we could see support come into play at this zone here in around 1.3830. Sticking with the theme of the UK, this here is the FTSE 100, the UK100. It's broadly been moving higher since kind of mid to late July. This kind of ties in with the theme that the US economy has been recovering. In the last few months, we've seen impressive services PMIs and manufacturing PMIs from the UK economy. This kind of adds to the overall theme that the British economy is recovering. Very large portion of the UK economy is now operating without restrictions in terms of COVID-19 restrictions. That's broadly speaking, given a boost to the British stock market index in British shares. It's also helped the British pound. So traders are going to be looking at Thursday's GDP number and wondering, how strong of a growth rate are we experiencing in the UK? In the week just gone, we've heard from the Bank of England, who stated that they predict the UK's growth levels will be back to pre-pandemic levels by the final quarter of 2021. So traders are going to have reasonably high expectations coming into this growth forecast, and as we can see here, the UK stock market The UK100 recently hit a multi-week high, kind of a 2.5, 3-week high, highest level since mid-July. If you can hold above this trend line here, it's likely the broader upward trend will continue. A move on higher from here could see a target 7,171. A break above that could see a target 7,217. If it do move lower, support could be found from this simple moving average here, or potentially a bit below that at the trend line here. And it's only really if you're going to begin to have a big break below the trend line, then we begin to get a bit worried. And if you do have a big break below the trend line, we could look to potentially down towards this zone here, down just south of 7,000 in around 6,994. And speaking of the topic of US stock markets, let's take a quick look at the S&P 500 as well. That's had a positive run as too, and once again traders are going to be focused on, are we seeing decent levels of demand? And the S&P 500, although it has been trading in a range recently, in the last number of hours, the US500 managed to kind of set basically yet a new all-time high. We're kind of at or just about in the kind of territory of yet another all-time high, which really kind of sums up how bullish the market has been recently. While the US 500 continues to hold above these three simple moving averages, it's likely the broader upward trend will continue. A move higher from here could target 4,440, and if you do see a move to the downside, support could come into play from this simple moving average here, which is in the region of 4,385. That's all from this video. Thank you very much.
Thank you.